In this video, guys, we're going to look at different order types, perfect for new traders. Stay tuned. Hey guys, very warm welcome to you. All right, so this video, check them out as a link to the description below. I'm going to log in a moment to the C-Trader platform. I'm going to look at the different order types that you can use as a trader and why you should use a specific order type over the other. So we've got simple buy and sells, of course, but there are other different order types that we can use, and we're going to use the C-Trader platform to go through those. So now the reason we kind of use these different order types is to achieve different things. So we can think, before we kind of hit the platform in a moment, I want you to think in terms of price and time. So there's really two things that we're trying to achieve here. One is the best price and one is the quickest execution, or a hybrid of the two. So before we get into the platform, if you can think, hey, do I want to get the best possible price, or am I very price sensitive, or am I very time sensitive? And that would indicate how you are going to, which order type you're going to use. And that is to get into the market. And then we've got different order types to get out of the market. And again, thinking about taking profits, how we're going to do that, and taking a loss. And we want to lock in profits and we want to make sure a loss doesn't go further than we expect it to do. So these are the three kind of things we're looking for: getting in, whether we're price sensitive or time sensitive, and getting out of the trade, whether that is with a profit or locking a loss and ensuring the loss doesn't get more than we want to. So let's check out C-Trader now. Hit the screens and we'll put some order types through and we'll see exactly what it's all about. Let's go. All right, guys. So I'm in the C-Trader platform. Check them out and see what the spreads are like for the instruments that you trade. Okay, so let's say we're kind of scanning through. I'm going to go through all symbols here. I'm going to hit something I particularly like to trade myself, which is NASDAQ. So I'm going to go to NASDAQ 100. I'm going to pre-populate. I've got this set up to a daily and an hourly chart. So we're a bit weak at the moment, aren't we? We've pushed down. And what I'm going to do is I'm going to kind of create new order. So in these orders here, we've got a different selection. Now I've got a choice. And that's consider I don't have a position at all. I'm trying to get in the market. Now we can go long or we can go short. And let's imagine I think I want to go short. So in other words, I want to profit from a fall in the market. So I'm going to populate, or I'm going to click the left-hand side of this ticket, and it's going to highlight the sell section. And it's going to give me kind of updating price. And you can see at the moment it's 11.008 point whatever it is to sell, and 11.008.8 whatever. It's changing as I'm saying it, guys, because it's a volatile market to buy. And the spread here, we can see the difference. A little bit variable, 1.3, given the higher the day, lower the day, fine. So, and we can get more information and stuff like that, but let's talk about the order for now. So now I want to put in my position size. Now, bearing in mind, guys, you've got to be very careful about your position size. Always err on the side of the smaller size position. You can always increase it. So if you want to just put in a small position, get a feel for it, you can always add to the position once you feel more comfortable. I'm a big advocate of scaling or scaling out of a trade. That's by the by. Okay, so now what we're going to do is we can choose. Do we want to just hit the market? Which what will happen is, as we click place order, that will enter us into the trade right now at the price we hit place order. Now you can see how quickly the market's moving, guys. They're just passing on the price to us, and it's moving quickly and aggressively. So if we hit place order now, we could get filled at 96, we could get filled at 99, we could get filled at 94, could get filled at 11,005 if that's the price it hit by the time we pressed place order. It went to very, very short period of time. So we've got that choice, and that's when we come in again, whether we're price sensitive or time sensitive. A market order is time sensitive, whether it's a market sell or a market buy. Notice we're giving up a little bit what price we get. We've got a rough idea, and we can kind of adjust this with the market range here. I don't want to go into much detail about this, but basically we can ensure that the market, if it moves quickly while we press the button, it won't fill us too far away from the price. Now, if we're price sensitive, okay, so let's say we're price sensitive, we're like, you know what, I want to short this, but I don't really want to just stab at it here at this 90, because it could move, and I want the market to come back to me a little bit. So we can quite easily here now type in what price we want to enter. So let's say we want to enter at 11,000, for example. Okay, and we've got our price, our size here again. Always ensure that you're a small size, guys, and to give you an idea on the margin requirements here for that trade. And we can have an expiry on it as well. An expiry basically means how long we want to leave this order as pending. So now if we enter this order and we hit at 11,000, we're basically saying, you know what, we are price sensitive here. We're not too time sensitive. We're going to place the order in, and it's gone in, fine. That now has a limit order in for us at 11,000. So we're not going to get into the trade until, let's go just ping this off for a second and just look at a 1 minute chart, so maybe we can see it might even get filled at some point. We're not going to get into the trade unless the price comes back and tags 11,000, because we're price sensitive. You know, there's a distinct difference between hitting at the market and getting in a price sensitive. Fine. Okay, so that's getting us into the trade. And by the way, if we're getting long, we do the same. We should have a buy limit and put our price in. Sell to get short, buy to get long, market if we want to get in now immediately. Okay, so a stop order. Now, a stop order allows us to prevent any further loss on a trade. Now, that's one way of using a stop order, and what we could do, we could attach that to the trade. So let's say we wanted to go short here, and let's say we were doing a couple of pounds a point, whatever it may be. We can attach a stop loss by ticking this box here, and that's going to say, right, where do you want the stop? You can have it in pips, you can have it in price. Great, and now we can kind of look through and go, okay, well, maybe I'll have a 30-point stop on the Nasdaq. It's pretty tight for the Nasdaq, but whatever, you can choose and say that's the level I want it to be at and fix it on price. Or you can go pips and go, right, I now want it at 32.4 for whatever reason, and that's then going to keep it a fixed number of pips. So what that will do is it will take you out of the trade should the market come up to that level. So let's say our sell order in now, bang, we're in, we're filled, 10,988. We've got a stop attached to that order, which will now mean if the price moves up and we're in a loss condition, it will take the trade out, causing no further loss. Now, one more thing we can add here is if we want to add a limit or attach a limit to that price, or attach a limit to the order, we can sell, and now we can highlight this take profit, which is actually technically a limit. And what this is going to do is going to say, okay, we're going to attach both or one or the other or neither, by the way. So at this point we can go, right, I want to take the profits, I want to take profits at, let's say we want to take profits at 10,800, for example. I need to clear that out. So 10,800, that would be our take profit level. Say we don't want to stop on it. We always recommend a stop, by the way, guys. We could put our stake in, let's say £2 a point, whatever we've got here. By the way, just been filled on that sell limit that we had in at 11,000, don't forget, because it's just popped up and filled us. That's the limit we put in the first time. That was our limit sell, and because we're price sensitive, we're only prepared to accept at 11,000. We have to wait for the price to come back. Now, of course, the downside is price might never come back. It could just could cascade lower, and we never ever get filled in it. So now, if we're looking for this example here, guys, we can attach a limit order to take our profits. So the other orders we hadn't attached a limit. The second order we'd attached a stop loss to. This one we can attach a stop and a limit, but in this example we'll attach a limit, and a limit order will take us out of the trade. So we can go short here at 10,990.7, whatever we get filled at by the time we hit this trade. And if the market goes lower by 200 odd points, it's going to take us out of the trade and going to give us an estimated profit here of around £380. Great. So that attaches a limit to order to the trade. Let's just place the order and put that in. Great. Other things we can do, guys, is we can enter stop orders to get into the trade, or whether we're going long or short. So how would that work? So we talked about attaching stops and limits to our trade entry. How about if we wanted to get into a trade that we weren't in already? So let's say, for example, we were doing some analysis here, and we said, okay, if the Nasdaq gets up to 11,300, we want to get long. Okay, but we don't want to be at the screen watching it. So we'd use a stop order, a buy stop, and we put our price in. So let's say whatever price we had, 11,300. Our analysis says that we think that actually, if the Nasdaq breaks that to the high side, it's going to go further, and we want to do that at, say, I don't know, £5 a point, or £3 a point, for example. Just highlight that, £3 a point. And again, we can select an expiry on this or not. So now it's just saying, great, if the market should go higher and break that, we're going to get into the trade. So it's only going to trigger us into the trade if the price goes higher. And again, to not confuse things further, guys, we can attach a stop loss to that stop entry. So stop entry just gets us into the trade, and we're expecting to follow the market. So if it's above the price, buy stop means it comes in If the price breaks 11,300, we can then attach a stop loss to the trade and a take profit to the trade. So we could say, hey, you know what? I want to take profits 100 pips, for example. It'll be minus 100 pips because I want to have a stop loss at minus 100 pips. And I have to take profits at 200 pips, for example. And now it's pre-populated and says, okay, if you get into this trade, if the price goes up to 11,300, you'll be in long, £3 a point long. Whatever your size may be, your stop loss is going to be 100 pips away from price, 11,200, target's going to be 11,500. Your trade is now structured. Again, we can place that order very easily, and that means the trade is sitting there ready to be executed if price should go and break above that 11,300. So that's when we enter. That's when we enter the market, when it's the price is going to break a level and we want it to continue. That's a stop entry order. A limit order, guys, is when we're saying, okay, we want the market to come to us. So rather than it to continue, a limit order would say, okay, we still want to stick long with the Nasdaq, for example, and we don't want to buy it until it comes to 10,500. So our buy limit, again, we put it in here, we get rid of all this, we go, right, 10,500, that's where I want to buy it. I can attach an expiry, a stop loss, a take profit, hit my place order. That means that I'm basically saying, okay, I want to buy this only when we get to 10,500. I'm very, very price sensitive. I'm not time sensitive. I don't care how long it takes, but that's what I'm looking for. And that's how you can structure trades and build nests of trades around your ideas and themes. So if you consider that whatever your view on the market is, whether you're looking to trade a breakout automatically, stop entry or stop order it to get into the trade, attach a stop loss and a take profit to that trade, or whether you think the market's going to be stretching, looking for it to come back, which then be a limit order, and again you can attach a stop or a limit to that trade. However you have analyzed and what you expect from the market, you can replicate that specifically in C-Trader here with different stops and limits. And my recommendation, guys, is to open a demo. Open a demo, have an idea, have a theme, what you want to achieve with the trade, and then enter the orders, see what size does, see how they get executed, and work out in your mind exactly what each of those orders does. It's very simple once you kind of thought about it and get the logic in your mind. It can be overwhelming when you're a new trader looking, what's this stop limit and this or that, the other, limit order, stop entry, what stop is a stop loss. But once you get used to it, play around with the demo, then it becomes a very, very powerful way of being able to get in and out of trades without having to be in front of the screen. So you can be out and about, your trade can be protected, your trade can lock in profits if it goes in your direction, you can get into a trade if the market starts to do something interesting. Loads of different permutations and a very, very flexible and useful tool having those different order types. Right, guys, take care. See you next one. Bye-bye.